So let's just start. Where are you sitting at right now? How do you see the Fed's decision coming up this week? Do you believe it's going to be 25, 50? Does it matter for the markets in a big way or just a small way?
Well, I think it's basically a coin flip right now as the markets are showcasing with the futures. I think what's really going to be important is what does Chairman Powell talk about during the conference? Because we only have a few more months till the end of the year. Are they behind the 8 ball here? And so we think it's really going to be about the telegraphing of what's to come and then not meeting again until November 7th. So there's a lot of time between then and now. And so what are we going to see?
We want to get to a few things, but what are you saying when you're worried about them telegraphing? Is the idea that are they going to telegraph there's going to be another 50 coming? I mean, because we know it's the start of a cycle. So what are you looking for as far as the telegraph?
We think they're going to come in at 25 with the possibility of 50. But really what they're going to telegraph is, okay, the employment situation is not as dire as some of late have been talking about, saying we're going over the cliff. You know, this is not a Wile E. Coyote type of moment. This is really just it's a cooling, not a collapsing. And so I think that's what they're going to try to get in front of. So they say, look, we're not going to be back until mid-November. So don't worry, we're still on this. 25 is enough for now. The only thing we think about, though, is could you do 50 just to placate the market and say, since we're not going to have a meeting in October, we just want to give you a little bit more comfort. You
know, a lot of people have been weighing on this. In fact, my colleague Sarah Eisen talked to billionaire hedge fund manager John Paulson last week. I want to play what he had to say about the Fed and get your take.
Personally, I think the Fed is a little behind the curve. Rates are, 5.25 plus, and inflation's down to the 2.5% rate. So we have almost 3% real interest. So I think they've seen enough data that they can start bringing rates down. And I would suggest more aggressively would be better. So I'd be for a 50 basis point cut rather than 25.
You know, Jeremy Siegel was on the same show, on later that day, also saying that the Fed's behind the curve. So this growing course, the Fed behind the curve, I don't want to stick on this for a while. You already said you think it's 25 basis points. But is there any risk that 25 basis points just won't move the markets because people think the Fed is behind the curve?
You're spot on. I think that the markets look at it as a non-event if they come in at 25 and they'd say, you know what, we're going to wait until November. Things are fine. The challenge will be for the Fed if we get some employment numbers coming out in October that are worse than anticipated. And to the great comments from the other managers, are we in a place then where they really have to start moving things up and you're coming in right after an election, right before the end of the year? So again, you could see how they might be a little bit anxious if they don't make that happen.
You know, we're going to cover everything. Fed, equity market, and bond markets. We got to keep it moving. You and I, we spoke on Friday a bit, and I was talking to you about just stocks and the interest rate cuts. And I was very surprised. You saw some opportunities in communication services, specifically with Meta and Google. We're going to show the chart since Jackson Hole. We got the signal that they were going to get the cuts. Both Meta and Google trading lower, the sector trading lower. What are you seeing that the other investors just aren't seeing?
We think it's the cash cows. When you look at their operating models right now and their ability to deliver earnings, they're still far and away better than most companies in the S&P 500. There's such a spread differential right now between some of these large comm services names and the rest of the market. So that's really our interest level there. Can they continue to do that? We think they can. The valuation's a little higher than you might want, but the earnings are there.
All right, we're going to go to bonds, too. You like the short end of bonds. I was looking at the 1 year. I was actually pretty surprised. Yield still above 4%. Would you park money in something that short of duration, or are you looking for a little bit longer to try to lock something in? When you look at by the way, the 30-year at almost 4% as well.
We'd come in a little bit out, extending out a little bit, but still on the short side of the curve, and primarily because we think as the Fed begins to cut rates, we're going to see more on the shorter to midterm part of the yield curve versus on the long end of the curve. We think that's going to stay pretty much where it is, if not maybe inch a little bit higher. As you point out, the 30 years close to 4%. We don't think that's going to go down materially over the next 3 to 6 months.